Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate finance. And what do we have here looks like a little bit of a debt dance turning into ownership. Let's see what American Clean Resources Group Incorporated really got into. So, what we're looking at today is a pretty straightforward report from American Clean Resources Group Incorporated, ACRG for short. It is what is called a Form 8K, and really, it's like a company's way of shouting out an important event that just happened, something that investors really need to know about right away. Think of it as a company's urgent bulletin. This report is about a specific financial maneuver ACRG made. They had a line of credit, which is basically a flexible loan, with a company called Granite Peak Resources, LLC or GPR. And on the 31st of December of last year, they decided to pay off a big chunk of money they owed on that line of credit by giving GPR a whole bunch of their company stock. It's like saying instead of paying you cash, here is some ownership in our company. They issued over 1.6 million shares of their common stock. Now this wasn't just a little bit of debt being cleared up. We're talking about cancelling out about $1.7 million worth of debt. So GPR wasn't just a lender anymore, they became a significant shareholder. The price they calculated for each share, what they called the implied conversion price, was about $1.05. This is a key number because it tells us how the company valued itself in this transaction. Now here is a bit of legalese, but it's important. ACRG says they didn't have to register these shares with the government before handing them over. This usually means they believe the deal falls under specific exemptions, often because the other party, GPR in this case, is considered a sophisticated investor, an accredited investor, and they bought the shares for their own investment, not to immediately resell them and cause a stir in the market. This is where it gets really interesting with this stock issuance. GPR now owns a massive 82.2% of American Clean Resources Group. That's a huge chunk. When one entity owns that much of a company, it means they have a lot of control. They can make big decisions, influence everything from strategy to who sits on the board. It also means that regular public shareholders, the ones who aren't GPR, have a much smaller piece of the pie and their voting power is significantly diluted. In practical terms, GPR is now the main driver of ACRG because GPR is now a major shareholder and this transaction significantly changed their stake. They have to file something called a Form 4 with the Securities and Exchange Commission, or CC. This form is to tell the public exactly what insider changes happened in terms of stock ownership. It is all about transparency and making sure everyone knows who owns what and when those ownerships change, especially for people who have a lot of influence. Looking at this, American Clean Resources Group Incorporated has essentially converted debt into ownership for Granite Peak Resources. This is a common strategy for companies that might be struggling with cash flow or need to restructure their balance sheet. By giving up equity, they reduce their debt burden, which can improve their financial health and make them more attractive to future investors or lenders. However, the flip side is that the existing shareholders now own less of the company. It's a trade-off, less debt for less ownership. So, what is the story here? ACRG was carrying debt and found a way to clear it by giving up a substantial part of the company. This new ownership structure with GPR holding over 82% means ACRG is now heavily controlled by GPR. This could mean GPR has a specific plan or vision for ACRG, perhaps to grow it, integrate it into their other operations, or even take it in a completely new direction. The key takeaway is that for any other investors out there, the power dynamics have fundamentally shifted. You are no longer in control with the majority interest holders. What does this mean for ACRG's direction? Well, with GPR holding such a dominant stake, their strategy will dictate the company's future. If GPR is focused on growth and sees potential in ACRG's operations, we might see investment and expansion. If GPR's goals are different, perhaps looking to divest or restructure, ARG could undergo significant changes. The risk here is that the interests of the majority owner might not align perfectly with those of minority shareholders, potentially leading to decisions that favor GPR over others. An opportunity, however, is that GPR's backing could provide stability and resources that ACRG might have struggled to find otherwise. In conclusion, this filing shows a significant shift in control for American Clean Resources Group Incorporated. The conversion of debt to ownership by Granite Peak Resources has made them the dominant force in the company. What remains to be seen is how this new power structure will shape ARG's future operations and its value for all its shareholders. Alright, that is our breakdown of American Clean Resources Group's latest filing. What is your take on this debt to ownership swap and what it signals for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.